The perfect portfolio for economic uncertainty. My 2025 wealth strategy. Let's face it, the next 12 to 24 months won't be normal. We've got political chaos, currency instability, and market that's one black swan away from collapse. Most people will lose money, not because they are dumb, but because they are unprepared. Today, I'll show you how I am personally positioning my wealth in 2025. Not just to survive, but to grow, even in the chaos. The very first thing that I look at when building a portfolio, especially under times of uncertainty, is going back to basic rules of investing in chaotic, uncertain times of war or complete chaos, in that sense, stagnation. If we look at the market right now, the dollar is breaking low after low after low because, especially fundamentally, Trump wants to do that. Trump is throwing around his tariffs to completely confuse the whole economy, destroy every market structure. At the very same time, we have wars raging all over the world, conflicts that bring more uncertainty and instability. Especially in these times, gold, currencies like the Japanese yen, the British pound look very, very well and stand very strong, increasing in value, and that's what we're seeing right now. Gold is increasing constantly, making new highs after new highs after new highs, not really stopping. Gold at $3,000 per ounce is something that most people would have never thought will happen. From there on, fundamentally, we even have more potential to see a $4,000 gold per ounce or even more than that, because especially in uncertain times, the very first investment rule is put your money in gold. Should you buy gold right now? I don't think so, because the very first time I bought gold was 3 years ago when Russia started to invade Ukraine and the war started. So that's when I started to buy gold, because it was one of the major new conflicts in my time that I thought will not be handled in a short way, but will take a long, very time. Then we had the Israel-Gaza war, or Hamas-Israel war starting off, and all of this instability, then also now Trump coming in and causing this instability. But as I already said and discussed in previous videos, this is all a great plan. Nothing on this planet Earth just happens randomly, especially not in politics or in the markets. It's all planned, and there's always a certain outcome that people want to see. And what we want to see is markets correcting. Therefore, you can focus a lot on two major things. That is gold and commodities. I started to heavily invest into commodities, especially based on the theory, because Trump said he wants to increase the industrial complex of America. What do you need to increase an industrial complex? You need energy, you need resources such as natural gas, diesel, gasoline, natural resources in general, and all of the different commodities I just named. I started to heavily invest into natural gas, into oil, all of these natural resources, and this is not investment advice, but it just makes sense, right? All of these resources will be used to really achieve this goal of increasing the industrial complex. Therefore, these resources are more asked for. Trump tariffs also hit, for example, metal, so therefore different other, let's say, metals such as aluminium you can use, palladium you can use, you have zinc, you have copper, all of these ones could be a very smart investment. I'm not gonna tell you here off charts where to enter and when to exit. I did that on my crypto channel, which I will put the link below, where I exactly speak about the entries that I took and where I'm taking my targets. But that's in another video. Now, very important is that in very difficult times, what always works is most of the times currencies like the Japanese yen, which is a safe haven for crisis. You have British pound, which is strongly going up. You have the euro, which is strongly going up, while obviously the US dollar is crashing. And then you have gold and silver. You have the commodities such as oil, natural gas, and so on. And at the end of the day, that's where I would invest right now. Now, obviously, you don't need to only invest into assets, but you can also invest into physical businesses or put money aside. When it comes to the percentual allocation of, let's say, for example, crypto and stocks, how much would I put? I still have about 60 to 80% of my whole money in crypto, right? Long-term invested into the majors and some altcoins that I truly believe in. I sold all of my stocks and put this very money from my stocks, the profit and the current positions, I put them into commodities. At Trading 212, you can buy a 3x leverage of oil, natural gas, or ETFs, right? Like the iShare commodities or iShare energy, right? Which includes all of the energy stocks in America, right? Such as all of the oil providers and the oil companies and the whatever companies, right? So I truly believe that these one will have a massive upside because to really come back into a very strong economy that every country wants right now, we will need a lot of natural resources. Now, when it comes to especially real world assets, we need to dig deeper into them because real world assets seem to become the very next big thing where people will need to invest into. So I will do a certain extra precise episode and video only about real world assets in the future. Subscribe to this channel, put the bell on so you will be updated when we will talk about the next very big investment where you can make money in real world assets. To name the three main sectors that I see that will outperform the next 12 months, commodities, I definitely see the Japanese yen, and I definitely see real world assets that we need to talk about. I truly believe the next real crypto hype in this year is going to be real world assets, not even altcoins or main coins. So these are the three things that I'm focusing right now. Did I already invest into real world assets? Not yet. I'm still in the research phase, but as I already said, I invested a lot into commodities and I already invested into different currencies to just hold my cash reserves or just have also money in stable coins. Not only one stable coin, but multiple ones. At the end of the day, to just be a little bit more diversified and have more stability and just waiting for opportunity. Sometimes it's good to just put money aside and be ready if something happens, and there will be something happening, to get everything cheaper. Because most of the times, obviously, when there's big problems in this very world, if there's crisis, if there's stagnation, inflation, all of these negative things at the end of the day, people don't have money, right? They already don't have money, but then they have less money. They are forced in a situation where they are now completely unprotected and not possible of investing any money. So if you are someone that holds cash right now, puts money into stable coins or into investments that maybe keep their value increase a little bit. I mean, in natural gas, I'm not looking for a 20x, right? I'm looking for 1 or 2x. But this is good money because I'm beating inflation, I'm keeping my money pretty safe, and this money then can be used and deployed if everything crashes to buy at very cheap prices. So I truly believe these three sectors, commodities, currencies, and especially real assets, will outperform in the next 12 months. I truly believe that the biggest mistakes investors are doing right now, especially with their portfolios, is that they are over leveraging on positive risk in the sense of still being positive towards the market, still seeing a bullish comeback because they made a lot of losses, right? And I was struck and I was in that vicious circle myself for two rounds where I thought, okay, we are approaching re-entries, let me go in, right? Let me take some out of the market, increase my risk a little bit, and obviously we got wrecked completely, which the risk was still manageable, obviously. But yeah, I truly believe people were too bullish, especially in the crypto markets and everywhere else. On stocks, I did take it a little bit more conventional and I took a lot of profits already because just every target was hit. But that was the vicious thing about crypto, that we were in buy zones and there was no targets hit. There was so much potential. But obviously, we already talked about it. Volume got hijacked, economy, Trump, blah, 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 all of these things, institutionalized markets now, just not these normal, ups and downs, like, again, bull runs and bear markets. All of this doesn't exist anymore. We are in different times. So I truly believe it's over leveraging and risk, being optimistic, even though they should not be optimistic, but more focused on sell positions and taking a lot of profits. And that's always the same thing. People don't take profits. They think it's going to go higher and higher and higher. They don't want to miss out. But some of my best trades in Nvidia, in Google, in Facebook, in whatever deal, Solana at $22 or something, like, I took profits. I took XRP, 75% of my holdings or 70% of my holdings. I took profit on the C target, which basically is our indicated area where price is gonna go, right? I did play very well on the investment side, on the holding side, and I did take a lot of profits exactly because my system was telling me we need to take profits. But in crypto in general, I was more optimistic and that led to losses. And that's what most people are doing wrong right now. So I'm not saying you should be negative all in all. Markets will come up again, but you should definitely not be too bullish right now and waiting for this bull run. And that's exactly what I mean. People are still waiting for this 200, 300% pump. It's not gonna happen anymore. So to make this very simple, if I had to restart with 10K today, what I would do, I would use this 10K and I would definitely still put about 5K into crypto right now because we are at very, very low prices. this 5K I would not just deploy right away into Bitcoin, Ethereum, and Solana and XRP, but I would DCA into it, which means dollar cost averaging. So I would say every Friday or every month from now on, I'm gonna take 1K. So you have 5 months, and this 1K you're gonna distribute to the projects that you're gonna be focused on. I would mainly be focused on Ethereum, Solana, XRP, Link. There's many more, but you need to keep it small. You don't have enough money. Let's go with the bigger ones, right? The other 5K that we still now have, I would divide, let's say 3K into commodities such as natural gas, oil, and you can basically buy ETFs. So on Trading 212, which is the platform I use, you can definitely just buy ETFs that are focused on energy, that are focused on oil. There's even with leverage 3X, which I think makes a lot of sense. So buying a couple of ETFs and general commodities makes a lot of sense. Some of them that I already named, many more of them are gonna come into re-entry buy positions soon. And obviously I will always update you guys in our channels about that, especially 15-minute crypto that provides with trade ideas and knowledge. Link is gonna be below, check it out. And then also the third investment I would do, this 2K left, I would just wait for opportunity. Something is gonna happen, a trend is gonna emerge. Markets always move, you just need to figure out where. And this 2K I would dedicate to see in the next couple of weeks or month what is going to look interesting. And I truly believe real world assets are going to look very interesting. So then you can deploy some money into that we need to put into the cryptocurrency, let's say at the end of the day, bracket. But at the end of the day, the crypto market overall is very complex and there's always certain trends and narratives. First it was the NFT narrative, and then it was the meme coin narrative, and now it's gonna be the real world asset narrative. That's how it always works. Inside of the bubble, there's always different things that trend and will be focused on. And I think real world assets will be very interesting, but we'll dig deeper into them in the following episodes. Most people did not really go broke because they picked a wrong coin or wrong investment in general. Pretty much everything went up since COVID, right? Since C19, every market has been going up. Yes, we had a little bit of correction, but it's always the same problem that repeats itself. It's the vicious circle of buying low, but then never selling and then being low again or even losing more. It's the greed, it's the fear, it's the emotion, it's the game plan that was not in place, or the game plan that was in place but then not followed because people started to get greedy. People invest 10, now they have 20, they want to see 30, they want to see 40. They start to calculate, oh, maybe it will go higher and I will make 100,000, 100,000, I can buy this car. That's what you should never do. You should have a fixed target and then take profits, and that's what you need a system for. So if you don't have a system, you will get wrecked over and over and over again. So it's not so much about the assets that people picked wrong. Most people pick good entries and good assets because it's not difficult to figure that out, but they never sell it or they sell it too late. And therefore they're stuck with minus now. In 2025, you need clarity more than hype. You need to know why you are buying, what you're holding, and when you are exiting. If this helped you, rethink your approach, drop a comment, and if you want my full breakdown, portfolio, percent, coins, timing, make sure to follow, because this is the time to think like a professional.